Hey everyone, welcome back to Corporate Decoder. Today we're diving into the financial world of Principal Credit Real Estate Income Trust. It might sound like a snooze fest, but trust me, there's some juicy stuff in here. We're talking about shares, money, and what it all means for the future. It's like trying to understand the rules of a board game when someone's already halfway through, but don't worry, we'll figure it out together. Think of this as a peek behind the curtain of how a real estate company is doing and why it matters to you, even if you've never heard of them before. This report is like a snapshot of what was going on with Principal Credit Real Estate Income Trust around March of 2025. It's called an 8K, which is basically a quick update a company has to give to the government when something important happens. Principal Credit Real Estate Income Trust, that's a mouthful. For short, let's just call them Principal Credit. Now, Principal Credit is in the real estate business, but they're not your average house flippers. They focus on lending money for real estate projects, sort of like a bank, but specializing in real estate. They aren't that old, they have a file number of 0 to 56,670 with the government, so they are just starting up. Here's where the action starts: unregistered sales of equity securities. What does that even mean? Well, Principal Credit sold some shares of their company, which means they gave away a little piece of ownership in exchange for money. It's unregistered because they didn't go through all the usual hoops of offering it to the public. They took a shortcut and sold it privately. This is common for smaller companies that need to raise money quickly. It can be faster and cheaper than a traditional public offering. On March 3, 2025, Principal Credit created and sold 101,605.38 new shares to get some money. Shares represent ownership in the company. More shares there are, smaller each share becomes. They are selling these shares privately. This means they are offering the shares to selected investors, skipping the public offering process. The company got about $2,081,000 in total. That's over $2 million. It's like a quick fundraising round, and it tells us they needed some extra cash, maybe to fund new projects or pay off debts. It's important to understand that if Principal Credit is not a very old company and needs to raise money by selling shares, there are only two ways to raise capital: debt or equity. The company said that selling these shares was allowed by something called Section 4A2 and Rule 506 of Regulation D. This is a legal code that lets companies sell shares without registering with the Securities and Exchange Commission, or SEC, which is the government organization that regulates stock and shares to make sure everyone is playing fair. These shares were sold privately, which means they didn't have to go through all the usual strict rules. Now let's break down exactly what kind of shares were sold. There are two types of common shares. The Class I common shares, the company only sold 48.83 shares. This is a very small amount. With this sale, the company raised $1,000. Class FI common shares is the bigger portion of the sale. The company sold 101,556.55 shares. This sale raised $2,080,000. Finally, we have the signature. Brian Riley, the chief financial officer, is signing off on this report. It's like him saying, "Yep, this is all accurate to the best of my knowledge." The CFO is responsible for the financial side of the company, so his signature adds weight to the report. So what does this all mean? Principal Credit needed money and sold shares to get it. They did it privately, which means it was faster but also less transparent than a public offering. Now let's step back and look at the big picture. Is this good or bad? It's complicated. On one hand, Principal Credit got over $2 million, which they can use to grow their business or pay off debt. On the other hand, selling shares dilutes the value of existing shares. It's like cutting a pizza into more slices. Everyone gets a smaller piece. One thing to consider is the type of investors buying these shares. If it's mostly insiders, like the company's executives or board members, it could be a sign that they believe in the company's future. But if it's mostly outside investors, it could be a sign that the company is struggling to raise money through traditional channels. Another thing to watch out for is how Principal Credit uses the money they raised. If they invest it wisely in profitable projects, it could lead to long-term growth, but if they waste it on bad investments, it could hurt the company's future. So, is Principal Credit a good investment? It's hard to say based on this one report alone. But it's a reminder that investing in real estate, like any investment, comes with risks. Do your homework, understand the company's strategy, and be prepared for ups and downs. Thanks for tuning in to Corporate Decoder. If you found this breakdown helpful, please like, comment, and subscribe. Until next time.